This is Small Business Big World, our weekly podcast prepared by the team at Paper Trails. Owning and running a small business is hard. Each week, we'll dive into the challenges, headaches, trends, fun, and excitement of running a small business. After all, small businesses are the heartbeat of America, and our team is here to keep them beating. Welcome to Small Business Big World, our weekly podcast where we discuss all things small businesses, the headaches, the misery, the excitement, the challenges. It's such a fun time being a small business owner. And today my guest is Doug Sperling with Waves and Wilderness, right? The new business. Well,
you got it.
New business, but Doug also does some consulting and all sorts of other fun things. So today we want to talk about, using the cash flow from your small business to increase your net worth kind of exponentially. Doug's had some experience with that, and certainly I think he's got a great story to tell. So welcome, Doug. Thanks for joining us.
Thanks for having me.
Before we hop in, don't forget, like, follow, share, rate, review, subscribe. We are everywhere you download your podcasts. We are on all the social media platforms. You want to see the little snippets that we put out there, we're there. Please don't forget to do that. If you have any questions about this episode or any episode, feel free to email us at podcast@papertrails.com, and we will get back to you. So Doug, give us a little bit of background on, where you've come from and where you are today.
Sure. So I think if we start maybe 2010, so 14 years ago, that's when I graduated UNE. So from our local listeners, I was a UNE grad, 2010, majored in exercise science, got into the health and wellness industry, worked in a nursing home in high school, wasn't sure what I was going to do, went to college for exercise science, thought I was going to be a doc or a PT. Ended up in the fitness space, opened, our local folks will know Sperling Fitness, opened that in 2012 and ran that all the way up until this year. As of this recording, we're summer 2024. I sold that business in spring of 2024 to Josh Williams, who was an intern of mine from 2012 to a poorly paid employee to a manager, all the way up 12 years with me. And he took that over and bought that from me in 2024. And so I think, 12 years of running a small business, I'm sure we can unpack lots of lessons learned and ways of doing things right, ways of doing things wrong. But I've transitioned to consulting for that industry and using the cash flow to invest in real estate. So that's what I do today.
So Doug's a little bit like your own little Grant Cardone, right? That's.
I mean, hopefully not that much of a. He's got a hopefully stronger personality than me. But
so one of the things, I think you've run a small business. You built it from just you to several employees and clients and a big business. And through that process, you found some cash flow that you were able to use. And I think I see a lot of clients who are struggling to manage that cash or even gain that cash flow. How do we get cash flow in our business? When we talk about cash flow, we talk about profit usually. How do you even get to that point? And I always tell people you have to go back to the basics of running the business, right?
Yeah, for sure. I mean, I think if we break down probably some of the common problems that I know I faced in the beginning, and to be clear, like all of us as small business owners go through these problems. It's not like, I wasn't a unicorn by any means. I just finally at some point, I think fell in love with the business side of things. I think many of us get into whatever business we're in and we love the thing. So if you're a gym, you love helping clients. If you're a restaurant, you love the serving the food or cooking the food, or you want to be behind the grill all day, whatever it is. But I think we saw a pivotal moment when we focused on basic business like sales and marketing and team development. Some of those core principles that I think you can't be running the business and also focusing on growing clientele, marketing the business, building your team. That's kind of working on the business versus working in the business. So, we can certainly unpack some of those, but I would say from a 30,000 foot view, looking at making sure we're working on the business, not just in the business front facing.
And that's, I think, so many entrepreneurs, so many small businesses have that challenge, right? You go from doing the thing to now you need to run the thing. Mm-hmm. And, I saw something online recently. It was like there are different levels of running a business. First is $300,000, $400,000, $500,000 is that first in revenue is kind of that first pivotal moment where you go from just me producing that to now I need people to help me produce that, and bringing on your first couple of employees and helping develop that, and then you get to that next level of maybe $2 or $3 million where now you're really managing people to do the work, and that's kind of the phase of my business that I'm in is where now I'm having to transition from doing a lot of the day-to-day work to, I told my team last week, like I'm the maestro. I'm here conducting the orchestra now. I'm not doing the day-to-day stuff, as hard as that is for me as a doer, because I'm a doer. For me to take my fingers off things is hard for sure. But there is that phase of business growth where you have to, that's how you have to transition. And I think you said it perfectly, working on your development of your people, working on the processes, working on, keeping an eye on your numbers to be able to realize that profit, that cash flow, right?
Yeah, I would say, some core things that I think were really helpful for us, if we break it down, maybe tactical for the listeners, would be proactive monthly marketing. Like most small businesses don't market. We just, I famously hear, I just grow through word of mouth and referrals. And to be clear, that's awesome, but that will only get you to a certain point. At a certain level, any small business that wants to grow, maybe it's, beyond that couple 100,000 that you spoke about, you need a client acquisition channel, such as whether it's paid advertising, whether it's, direct reach out to your network. There needs to be some type of monthly marketing plan where we're saying, hey, this is what we're going to do this month to go get clients, customers, whatever it may be. So a consistent monthly marketing plan was huge for us. Once we started marketing consistently, the business was able to grow and outpace every business, whether we're talking, my gym business or, any business. There's some level of churn. There's some level of cost that we have to overcome in order to create that cash flow. And marketing is one of the ways to do it. The other one that, it took me a while to understand is knowing your numbers and not just the P&L. The P&L is a lagging thing, right? You know this. It's the month is already over by the time you get your P&L. And so as a owner, operator, I think it's a little bit more important to look at your leading indicators. So for example, looking at things that and again, just using the first business with the gym, like we would always every week be checking in on how many people filled out a website form, how many people signed up for membership, how many people canceled their membership. So looking at your business and trying to understand what are the leading indicators to, sure, we want to have gross revenue, and then, cut out the expenses and we're going to have our profit left over. But by the time we see that on our P&L, the month's already over. So we can't go back and change those things. So the scoreboard, the weekly scoreboard with your numbers was another huge thing.
And that's two things, right? You talked about consistency, and that's really important. A lot of folks try something for a few weeks and gosh, it didn't produce me anything, so I'm not going to do it anymore. I'm going to try again. Well, a lot of these things take time to produce, right? I mean, there's things we've been doing for 18 months and we're now just starting to see, returns on that. And now certainly there does have to be a point where you have to, okay, that strategy is not working, let's pivot or change. But sometimes that consistency is in everything that you do is really important. I think, again, some people are looking for that instant gratification. We're in that society where everyone wants it. And that's really hard for a lot of small business owners, myself included, because I want it now, right?
Sure.
I want it done. We're going to move on. We're going to go to the next thing. But sometimes that's, not always possible for sure. And you talked about those kind of leading indicators, and that's really relevant to most businesses, right? I mean, even if you look at, a restaurant, for example, there are slow weeks and slow times. And, if you have a goal of, you need to do $150,000 this month, and guess what? We're 2 weeks in and we've only done $40,000 this month, right? We're probably in trouble. And, guest counts are down or whatever. However you're measuring that, and you need to adjust, you need to pivot. Maybe you need to do a special, a promotion, whatever that may be. And I know you've done that as well. Like, gosh, we see our membership numbers we have a goal of 5 new members a month or whatever. We're on day 20 and we've only had 1, right? Mm-hmm. How do we hit that finish line and be successful to our goals? And I think setting goals is important too, right? I mean, most people don't even have that.
Yeah, we would have a Friday check-in where at the end of the week, we would just review how that week went and, adjust your plan, adjust, what you have on your to-do list for the following week based on that Friday review. So if numbers were off track, I mean, I realize every day you're not going to be able to pause and analyze things, but we can certainly mark off, a half hour to an hour at the end of the week, review how the week went. And then, like you said, if things are off, it's not just kind of shrugging your shoulders and, you gotta kind of make sure we change our strategy and say, hey, this is off track for our goal for the month, and we're going to increase our marketing next week, or we're going to go do some direct reach outs, or we're going to run this special, or we're going to do something to change the course.
Right. I think, one of the things that I've learned in that is also share that with your team, right? You had mentioned have a weekly meeting we don't do that as much in our business, but I share the performance. I share our goals, right? Here's our strategic plan for the year. Here's what we're going to do this year, so that when we're adding staff or we're, letting staff go or which hopefully doesn't happen often, but we're changing strategy. We're doing this. You're taking on new projects. People aren't surprised, and they can also be rowing in the right direction with you. And the same thing, right? We do about a monthly check-in on those numbers, and I say, okay, here's where we are to our goal. This is what's kind of on the docket for this month. This is what we get accomplished last month. This is where we're at. And that's good for my management team because it keeps us accountable to ourselves. And it keeps us accountable to the team to say, okay, our goals are to grow to this point so that we can all share in this wealth, right? And we do profit sharing and other things. So there's an incentive for them too. So I think we see a lot of business owners, and this has been hard for me too, but is to let go of some of that information and really enable your team to perform.
Yeah, there's a great book, if you want to read more about it, called The Great Game of Business. And The Great Game of Business talks about...
I'm writing that one down.
The Great Game of Business talks about basically teaching the game of business. Business is a game, right? And I think the more you can treat it like a game, you can have fun with it, right? It should be fun to run a business. And I know there's stresses, just like, in a sports game, there's stresses and people get mad and people get upset, but it's still the love of the game is what keeps you in there. And the game of the business talks about teaching your team the game of the business, because they don't understand business. I mean, frankly, in the beginning, most operators don't understand business.
Sure.
So it's once you understand it, then being transparent, being vulnerable, being open, teaching that to your team, because otherwise, they're gonna either be completely blind to it, or they're gonna make their own assumptions of how the business is doing. And as an employee, especially in today's market where there's probably other opportunities out there, the vision of where you're going, the strategy of what you're doing, how you're doing, and how they can play a part in it, I think is huge.
Absolutely. All right. So the game is you're winning, right? We have the most money in Monopoly at this point. And, things are chugging along. You've got the cash flow. The business is making money. Where, I know you've had some experience with this. Okay, we've got the money. We've invested back in the business. Of course, we're keeping things going. We're sharing the wealth with the team, so forth. Things are good. But and I don't need as much. So what do I do with that extra money, right? There's all sorts of different options. What have you done, and what have you seen others do?
Yeah, I mean, just a little bit of my story first, and then maybe some strategy. After we kind of rebuilt during COVID, so for context, that was about year 10 of our business. I helped the team rebuild, and then had once we stabilized and kind of got back to our normal operations, for lack of better terms, had this point of reflection that was basically like, this is about as big as this business can get. And in our industry, the fitness industry, because I'm for context, I'm still an active consultant in the industry, so I have good ideas of what others do. The most common strategy is to open up another location, just like you might see in the food business or other businesses, where they decide to, okay, this restaurant's kind of at capacity, so I'm going to go open up another location.
Because you're physically constrained from revenue growth.
Correct. So we kind of figured, that was about the max that location could do. And for me as an entrepreneur, that eventually got to a point of frustration and boredom, a combination of both. Like frustrated that I couldn't grow it anymore. And I like growing businesses. I like building teams. And that it was more about the stability and the efficiency of the business, not so much the growth. And I was also clear that I didn't want multiple locations. The idea of running multiple locations meant more headaches, and everybody that I've seen do it, you get this kind of running around like a chicken with your head cut off, just bouncing around to multiple locations. So I was very clear that I didn't want to do multiple locations. So you have the profit coming in, and obviously you want to reinvest. I think of, understanding, is your business a cash flow business or is it a cash out business? And for me, it was very much a cash flow business. What I mean by cash flow is it should be generating monthly cash flow, unlike, say, a software company, where, a software company might run at a negative, or maybe, break even at best, in hopes that they're going to get bought by private equity in 3 to 5 years. Most of us are cash flow businesses, not cash out businesses. We're not going to get this big pot of gold at the end and sell to private equity. And so it's my opinion that your strategy should be to take the cash flow from your business and put it into something that is long-term, whether that's investing in index funds. I chose the real estate path, but either way, you're taking the cash flow out of your day-to-day business and making sure that is a long-term asset, because most founder-facing businesses, meaning the founder is kind of the face of the business, there's no big giant pot of gold at the end. And so we want to make sure we're taking the cash from that business and putting it into long-term investments.
But not that there needs to be a big pot of gold at the end, but I think most small business owners don't think about what the end looks like, right? And just because there's not a giant pot of gold doesn't mean there's not a little pot of gold at the end, right? And I read a book recently called Exit Rich, and maybe you've read that one, and because you've kind of done that. But it really comes down to making your business successful, doing all the things we've just talked about, right? Making it a cash flow business, making sure you have your numbers in order, your books in order, all that fun stuff, so that when it does come time for you to exit, for you retire or move on or whatever, there's a buyer out there for it. And you're right, you may not get 100x valuation like a software company, but 2, 3, 4, 5x, whatever, of your cash flow, or plus your assets, all that kind of stuff. That's real money, right? And could set you up for retirement or for the next step. And I think a lot of business owners don't think about that. They're like, well, I'm just going to work until I die. Well, and who wants to do that?
That's not a great strategy. Let's refine that. Yeah, I mean, the way I looked at it, and to be clear, I didn't know real estate was going to be my kind of, I call it my next act, right? Like chapters in a book or whatever. The next chapter, I had no clue was going to be the real estate. What ended up happening was we had cash flow. My wife and I bought a lake house just as a family home. And as a business person, I said, well, we got young kids. We're not going to be able to use this a ton. And so I said, okay, well, let me just throw this up on Airbnb. And it, happened. There was some good timing of it too, where it was during the pandemic where, to run away to a lake house was like the most desirable thing ever. And so it completely took off and obviously snowballed since then. But, I think it's important, whether it's real estate or simple index funds or whatever, just making sure we're, because a business will eat cash. We all know that, right? There's always something else to spend in your business. And, there's plenty of operators out there, myself included at one point, where you're not paying yourself or you're not paying yourself enough. And thus, the business just continues to eat cash. So sucking that cash flow out and putting it somewhere else, not only does it create a long-term strategy for you, but it also forces you to run a more efficient business because you're wanting to suck that cash out.
Yeah, I think that's a good point too, is, take care of yourself first. Don't sell yourself short. You're working hard. A lot of small business owners, we see don't take a salary, or they live above the store, or, they live a miserable life because they feel like they're beholden to their business. And I think that's one of those stages of business that you have to get out of the business and start working on the business. And, and that's when you can start to see some of the cash flow and managing things. So.
Yeah, one of the most foundational books. I'm a big reader. I think reader, podcasts, all of that consumption, as long as you're actually taking action on the consumption, you can get some, just like this, get some tips from people that have maybe done it or have gone through similar struggles. And Michael Gerber's E-Myth is, like, in my opinion, Business 101. And he talks about, the 3 stages. Most of us start as technicians, right? And so we're the one doing it. And then eventually we hope to get to the manager level, where we're still there every day. We're still doing it with them, but we're managing a team, right? And then there's the entrepreneur level, where, you can just be the visionary, you can just be creative, and you can just focus on the strategy, kind of the what's next. And there's a manager underneath you that's actually, implementing the day-to-day.
Quick plug, Doug has a book.
Yes.
Where can we get it?
1% Better. It's on Amazon. It's probably there's probably other books named 1% Better, so you probably have to search 1% Better Sperling. But yeah, that was a book that when I had the gym, I was sharing daily lessons to our clients, and basically saved kind of the top 50 or so lessons that everybody watched which ones. Some of them stuck, some of them didn't, et cetera. And so kind of compiled the top 50 more personal development based lessons.
There we go. See. So if you're looking for some summer reading,
there you go.
That's that. All right. So once you finish reading Doug's book, then you got to kind of start executing the plan. So you've taken that cash flow and used it. You bought the lake house first, started Airbnb, and you kind of liked it. Then it grew, right? You said, okay, let's do another one next year, right?
Yeah. I mean, I think the business is business, right? That's what I've learned, is like, whether you're running a gym, you're running rentals, you're running a restaurant, you're running, the mom and pop retail shop. The thing you sell is unique to you, but marketing is marketing, operations is operations, and people are people. So there's nuances behind that, but those are the three big buckets. And so once I could rip that apart and say, okay, marketing and going and finding an Airbnb happens to be, the most dominant as of today booking platform, marketing channel. That's the way I think about it. I think of Airbnb for short-term rentals, which is the asset class, as Airbnb is the marketing platform, right? It's just like paying a marketing agency to do your marketing for you. I'm paying 3% to Airbnb for them to share our properties all over the place. So, and there's other marketing we do, retargeting guests to come back, et cetera. But yeah, we took that cash flow, just continued to snowball it, and, still had other income from both the gym and the consulting at that time. So was able to use the cash flow and continue to snowball that, fell in love with it, continued to scale and grow. And now we're at 12 and hopefully more in the future.
Yeah, so 12 short-term rentals, 12 Airbnbs. You've chosen kind of that channel. I think for me, like I'm not quite as aggressive in that. I own a couple rental properties, on a much smaller scale. I prefer commercial because I don't like the Sunday morning, I clog the toilet. The Sunday morning I clog the toilet call anymore. I've done that. But I think it's using, it could be whatever medium you want. And some people don't want to deal with anything. I mean, for me, fortunately, I have relatively low maintenance properties, don't need a whole lot of, daily interaction. Not that they don't require maintenance and all that stuff and customer service for your tenants and all that stuff, but it's just not as active daily for me. And I think that's my preference because I'm still very involved in my primary business. I see a lot of clients that don't even want to deal with that. And they just start piling money with their financial advisor and say, hey, open a brokerage and see what you can do for me. Right. And on average, right, we see 8% or so return in that market. And that's not terrible either. So, certainly, we've talked about this in other episodes, but use your tax advantaged accounts first, right? Whatever you can, manage through that. But then if there's extra, go along with that too. And certainly with real estate, there's a lot of advantages in how you can play that tax game. I know, you've done cost segregation studies and, accelerated depreciation and, there's all sorts of different things that you can do in real estate to help manage, the tax implications too, right?
Yeah, I think you have to going back to your business, the best operators love their business. They just for years, I have never thought since I really opened the gym, it's hard work, but for 14 years, I still don't feel like I work. It's just my life and it's the game I'm playing and it's what I do every day. And I think the best operators, they're doing something that they truly love. And of course you have to, find what aspects of that you love, what aspects of that you don't love. But with the short-term rentals, I just fell in love with that asset class. So do I think it's more work than a multifamily or commercial, or certainly much more than a passive index fund? Of course. But it's the same thing as to me, putting money in an index fund is very safe, but it's boring. And if you're in a spot where you do want boring, then by all means, do the boring. Boring still works. It's not that it doesn't work. It's just, it doesn't get me excited. Versus I love the excitement of cleaning up our operations. We have a team now with the short-term rentals, so I'm not the one getting the Sunday call for the toilets because we still do get those. But, like any business, you build it big enough and efficient enough where you can have a team doing the daily operations. And, it's fulfilling for them. My cleaner, who was cleaning is a tough, talk about a tough business. She was our cleaner for our lake and still does do that one property, but she was a full-time cleaner. And last couple of years, we were able to move her to a full-time position, and she runs our daily operations on the short-term rental. So there's fulfillment from a joy standpoint of taking somebody that was, having a tougher job where, yeah, it's work to run the operations, but she can do it from her phone anywhere in the country.
Well, you've turned it into another passion project, I think, because you certainly, I see all the pictures and all the listings of the things you post, and you really put a lot of thought and energy into each of your properties where they have unique features, right? You have a movie room, or you have a game room, or you just did one with a mini golf course, mm-hmm. right? Which a lot of Airbnb folks, paint it and put some new sheets on and slap it online and run, right? But I think you've really taken that and built something with it and tried to build an attraction.
Sure. Yeah, I mean, like any other business, you got to be unique and stand out, and there's competition everywhere, and I think that's a good thing. Forces you to level up and be good at your craft and stand out from the crowd.
That's good. So yeah, so it can be done, right? This can be done, building something and starting to see, an increase in cash flow and in your net worth and so forth. It's consistency, it's hard work, and it's growing, and patience, which a lot of us don't have.
Patience, and yes, that's the key is patience, and we used to call it, with our team at the gym, we would call it nailing the basics, right? Like you have to, the shiny object is cool, but oftentimes that's not what works. What works is the boring basics, and just nailing those basics of good, consistent marketing, knowing your numbers, taking care of your people. I mean, they're not often the shiny object. I don't know what it is in other industries, but in the gym industry, we get all these ads and emails and campaigns for, we're going to give you 100 clients in 2 weeks, or these gigantic shiny object promises, and it's all just a bunch of nothing. But what does work, what does scale, is the boring basics. So just continue to nail the basics.
So that's the takeaway. Keep the boring basics and let it work, and watch it pay off. So, all right. Well, thanks, Doug, so much. Don't forget, like, follow, share, rate, review everywhere you are following. And you certainly email us at podcast@papertrails.com. If you have questions, how do people get in touch with you, Doug, if they want to? What's the best way? Instagram?
Yeah, social is probably the best platform, Facebook or Instagram. Just search my name.
Doug Sperling. There you go. He's got some good videos out there too. So check those out for sure. All right. Well, thanks so much, everybody. We will see you next week. Thanks for listening to this week's episode of A Small Business, Big World. This podcast is a production of Paper Trails. We are a payroll and HR company based in Kennebunk, Maine, and we serve small and mid-sized businesses across New England and the country. If you found this podcast helpful, don't forget to follow us at @PaperTrails Payroll across all social media platforms, and check us out at papertrails.com for more information. As a reminder, the views, opinions, and thoughts expressed are the hosts and guests alone. The material presented in this podcast is for general information purposes only and should not be considered legal or financial advice. By inviting this guest to our podcast, Paper Trails does not imply endorsement of or opposition to any specific individual, organization, product, or service.